And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, our daily market show where we go through the news, the charts, the information, anything that's grabbing our attention across financial media, and kind of break it down for you guys out there. Regular Friday show. We've got Frank here as always. Frankie, how you doing, sir?
Always doing good. Always excited about Fridays to come hang out with you guys, with the rest of the crew, talk some trading. My idea of a good time.
Yeah, no, we love Fridays. In fact, Team Tackle always loves Fridays as well. And we've got charts at the end as well. Frank, you've done your regular work as in terms of preparation. Got some good charts that
Yes,
we're going to
sir.
look at as well.
Oh, absolutely.
Always look forward to that. Maddie and Mark as well, as always, here on a light week in the news in terms of what the markets have been doing. Matt, Friday, finally, 8/21. This news environment has been pretty tame here recently. Maddie, how you doing, sir?
I'm doing really good, Tim. Excited to be here with the crew for Friday Frank Day, Friday Fun Day, however you want to categorize it. And my favorite moment of the week by far is when the coaches of Tackle get together and we hang out on Friday afternoons, ranking the markets, talking shop, going through the pick list and, kind of narrowing down those watch lists we put out in our scanner reports. And I'm looking forward to that as well. Mm-hmm. It's always good to hang out with the other traders of Tackle.
Absolutely. It's always a lot of fun.
Last but definitely not least, Mark, pleasantries on a Friday. It is Friday Fun Day after all. How you doing, sir?
Yes, I'm doing all right. So I don't have a lot of energy today. So don't read anything into my voice other than just long week, right? Some days you have that, but you got to bring it every day in trading, regardless if your energy is there or not.
Well, that's an interesting point, actually. Some of the worst trading days I've ever had, I was sick with the flu, or maybe I was tired or whatever it was, and you can get in there, you can have some emotion about it, but that's where rules, and the longer you trade, you have discipline in your rules, right, Mark? You're not going to approach the market any differently. Do you ever take a day off?
It's sleep deprivation or fighting with a significant other. Those are the two things that back in my poker gambling days always led to a series of bad decisions.
I saw a few of those.
Where I would wake up in a different city and much lighter in my wallet. So
Yeah, no, I get it. I do think that your physical state actually does make an impact on markets, which is why I believe in efficiency. I think a lot of traders spend 4 or 5, 6 hours when they could probably get their work done in about 1 hour if they became efficient with their daily routine. Speaking of which, we're going to work through the markets one step at a time here today. We got news, we got Deere earnings, we got Foot Locker earnings, Ross Store. We're going to take a look at Apple and Tesla, kind of talk about the anticipation, what's going to happen on the split. But let's start with the S&P 500 here, Matt, and let's just start with a technical read if we can. Obviously we've had some back and forth price action on the intraday through the week, but if you look at the daily candles, pretty light range on this weekly range, Matt. How are you reading the chart right now?
Same way I've been reading the chart all week long, and quite frankly, all last week as well. As long as it's riding that 9 and still punching up against that all-time high resistance level right there between 33.95 and 3,400, the breakout, I would categorize that breakout right there at the significant whole number at 3,400. And so I think like a lot of traders and investors were kind of, just kind of waiting, just patiently waiting every day, waiting a little bit more before we see that breakout. And then I think it's off to the races there. And, it's a light range candle when you look at the daily chart, but sometimes that does not tell the story that the intraday chart really kind of starts to tell. And yesterday, when you saw the market recover after the drop we had on Wednesday, you saw the market recover quite nicely yesterday, coming right back up into that resistance channel. But on the overnight action, once you started seeing European markets open out of Germany, out of the UK, you really started seeing the S&P struggle a little bit. And the reason is, quite frankly, European economic data. We got PMI reports, which are service-based and industrial manufacturing production. And when you saw the French, the German, the European, the British, but mostly the French and the German PMI numbers, both from a service and a manufacturing perspective, both of them showed some degree of concern regarding economic recovery. Especially out of the flash manufacturing index out of the French as well as the German, actually show contracting type recessionary data. And so that gave the market on the overnight a little bit of concern. And as you saw coming into the cash open today, just boom, 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 boom. Well, what happened right here to reverse the course immediately? Well, that's when you started seeing the U.S. manufacturing report come out, and the U.S. Manufacturing report today was actually very positive. Came in at 53.6 versus the expectation of 51.9. So not only were you above that very important threshold of 50, which shows contraction versus expansion, you also saw that situation be above the expectation of 51.9, above last month of 50.9. And so the negative European data was really impacting on the overnight, kind of gave that market a little bit of pause right there at that all-time high. And then the market responded after the cash open. Based on a couple economic factors. One of them was the flash manufacturing index. The flash services PMI report came out today. Both of them were positive. The flash service PMI number came in at 54.8 versus the expectation of 50.9. So both on the manufacturing side as well on the service side, those were two fairly decent economic reports that we saw here today. And it gave the market, that boost it needed, coming out of some overnight action that, wasn't aggressively negative. I mean, sometimes when you look at it on an intraday chart, you're like, oh, look at those big candles there. And it's like, yeah, but that's really a tight range when you're looking at the daily chart. So I think it just gave the market a little bit of reason to say, okay, we're going to buy up the market. We're not going to break out today, guys, but we're going to continue to stagnate coming into the weekend. And quite frankly, I love it. I think if we finish today somewhere in that 38.80 to 33.90 area, I think you're going to find a lot of potential breakouts next week.
Mm-hmm.
Yeah, and also, confirmation type candles on retracements. So yeah, this is a good. Let's just call this the end of the day. I think that's what I would like to see.
I think it is.
I think it probably is too.
It is. I don't think there's a lot of people on Wall Street after the light range boring. Think about just the amount of news in the last couple of weeks. It's really kind of been a boring market. I think Wall Street's on a Friday afternoon. They're going to have an early day.
Yeah, I think so.
Yeah, I mean, who wants to go first? Even anyway, right? No one's the first in.
Oh, they're going to want to be the first to get onto the metro to get out to the Hamptons.
Yeah, there you go. There you go.
Frankie, the longer you play defense on this 9, that 3,400 breakout, if it does happen, I know like you're talking about here, you like the doji, we could just call it a day right now and you would be happy with the chart. Does that give you more confidence in the breakout if it does clear that 3,400 next week?
Yeah, I mean, I think you have to like that breakout on some level. I mean, breaking the all-time high, we've had now well over a week at that high, perfectly logical reason for people to take profits. They haven't, right? Whether they, whatever the reasons are, we've been knocking on that door for a week and a half now. And, if we break through, why are they all of a sudden, yeah, let's do it now. So yeah, I think it would be an interesting breakout scenario if we can do it. I like how we've held up. I like that we've kind of rode that 9, fought back hard after, moderate, selling overnight, but buyers have, been willing and able to come in off of those lows. And so, yeah, definitely got to like the breakout potential in my opinion.
Yeah, one thing I'm seeing across the indexes this week, by the way, guys, the NASDAQ's made like 3.5% gain where the Russell's lost 1.5%. Matt, just kind of relative strength, relative weakness in that regard. Are you reading, obviously, just the same we have for a long time, NASDAQ the strongest, but the rut pullback there, Matt, I want you to get a read on that as well. What are you seeing in those two indexes?
I mean, take a look at it. Yes, the NASDAQ is 1A and 1B, no doubt about that. Mm-hmm. But that S&P breakout is something that I really, really like the trigger above 3,400. So you obviously got to look at the NASDAQ and be like, yes, that is obviously the strength of the market. And I'm not even, to the point where if you look at the NASDAQ versus the S&P versus the Dow versus the Russell, and you're looking at the indexes, it's pretty clear there. But when you just look at the sector performance today, materials down a little bit, communications hesitating on the breakout a little bit, although that communications chart is setting up pretty decent as well. Energy down, financial down a little bit, really struggling with the confirmation on that retracement that got people excited. Industrial setting up really good, but kind of stagnating, narrow range candle at support. I do like the industrial sector, but look at technology today. You know, the NASDAQ chart is a clean chart, but it's not as clean as just the technology sector in general. Technology, the breakout of 115 was strong, nice little continuation pattern coming into that breakout yesterday. And then obviously you got the follow through here today. So, you know, in terms of the NASDAQ, yes, you got to rank it number one from an index perspective, but when you break it down from a sector perspective, you got to like what you're seeing in this sector even more than when you're looking at the broad index, i.e. the NASDAQ. You know, Staples, you know, tried to break out. It's still kissing on that 9 EMA that's been very, very consistent over the last couple months. You know, the real estate sector, utility sector has just been stuck in mud since it tried to reclaim that 200-day moving average. You know, we got all excited for a healthcare breakout, and then it's just been nothing, even on positive vaccine news that we got today. And discretionary has just been a freight train, just kind of hugging that 9 EMA. So when you're looking at it from a pure technical perspective and you're breaking down the sectors, the two sectors that really stand out to me, well, the three sectors that stand out to me from a trading pattern and consistency and trend perspective are the industrials, are communications, but technology specifically is not only the strongest index, but it is probably the most consistent in terms of just pure technical pattern regarding the breakout that we saw yesterday on the technology sector. There's other sectors that are very consistent, just riding that, you know, gravy train of the 9 EMA, but it's not really forming any pure technical setups. The NASDAQ had a pure technical setup that broke out yesterday, and it's seen some follow through today.
Mm-hmm. You know, you had mentioned positive virus news. I believe that was out of Pfizer and BNTX, BioNTech or something. I don't know if I got that name right, but BNTX is the firm out of Europe, I believe. They were talking about an October timeline for a U.S. Vaccine mark to get final approval. I think that would make it available to consumers, by like November or something like that, if it did pass that. Mark, you know, positive virus news has been kind of par for the course in the market. Did you see that news out of Pfizer, by the way?
I did not specifically, but it's one of those things, right? You have 160 vaccines at different stages. I mean, just get used to a relentless string. You know, not every of the trials and not every of the vaccine is going to go well, but there's going to be days where there's positive news on one. And I mean, and because we're so deep into the process, I think you can really expect that almost to the point where it's almost like the market will be numb to it almost, you know, but it is going to be relentless.
Yeah. Matt, did you pick up the news out of Pfizer? I believe
I saw the news out of Pfizer, you know, and the headline is simply basically that Pfizer is looking to get regulatory approval in October. And if they do get regulatory approval, then a vaccine could come fairly quickly after that, whether it's this year or early next year.
Mm-hmm.
I took the Pfizer news as fairly consistent with other vaccine news we've seen lately. I didn't get, honestly, it really didn't move the needle for me. And maybe that's just because of what kind of Mark was talking about. There's so much vaccine news from so many different areas of the market, from so many different countries around the world, that I think at this point, the market is just trading and just the movements in the market are just making the assumption that we're going to have a vaccine. And so it's kind of discounting anything negative. But I took the news as positive from Pfizer, but it didn't move the needle for me, because I've always felt like, especially in the last month to 2 months, that a vaccine is going to happen, whether it's, you know, Pfizer's approval in October or, you know, somebody else's approval in December. I think most people are working under the assumption that we're buying some time, and the more time we buy, the better we're going to be when a vaccine gets here.
Yeah. I don't know why these companies continue to work on them. Didn't we already get a vaccine out of Russia? I heard
Well,
Putin didn't make that announcement, Frank. I think we're good, right?
We're good.
It's
That's all you need. We're good. The most curious thing about the vaccine news is not whether or not we're going to get a vaccine. It's who is going to win that race
Mhm.
of those hundreds of different vaccines in all those different countries. It's who's going to win that race to get to market first. And so that's more interesting from a pharmaceutical specific industrial type point. But I think the market's working on the assumption we're going to have a vaccine at some point in the next 6 months.
Yeah, I think it's kind of just the known timeline that we've
It
been-
doesn't have the market impact that vaccine news days, positive or negative. I can't remember the last time we had a negative vaccine news day, but positive or negative, vaccine news days really haven't shifted the market in the last couple of weeks.
No,
I
it's
mean-
kind of been just digested like normal news lately, it seems.
Pfizer's up 0.35%. I don't think the market even
No,
cares.
I mean, seriously,
Yeah.
Spirit Airlines down, AMC down. I'm looking at my virus plays. They're just totally mixed, you know?
Yeah.
So I mean, I think until you get a significant news, you know, the normal in the past, the airlines, the restaurants, everything, they just took off. It's just mixed today. It's
Yeah.
just totally mixed.
Yeah.
I think
Stocks
the
are
market understands that just because particular drugs move to a different phase now doesn't mean that it's actually going to be moving forward to market. And I think that's what they're starting to realize. I think the only news that we can get that would actually impact the market when it comes to the vaccine is the vaccine has been approved by the FDA and is about to be released. That's the only news that's actually going to affect the market.
and that it works.
I'm not even
right?
sure that would
I'm not
impact
sure.
the market at this point.
I think we need to be very careful whenever we say the market understands and then whatever follows that.
Probably fair. Probably fair.
That is a fair assumption.
Yeah, that basic premise. Well, stocks are floating into the weekend here, guys, on a light Friday trade. Let's break down the commodities market. Then we'll get into individual companies. We got some charts at the end as well. Crude oil down a hair here, guys. You know, it tried to sell yesterday, actually battled back. Now we're down. What are we down? 2.5%, you know, on a Friday afternoon, almost 3%. Pretty good little red candle there. You had to zoom in to find it because of the volatility previously. Maddie, first technical read on that chart. How do you interpret it?
This is why I've been saying the breakout was not for me. You never saw ever since we reclaimed that 200-day moving average on Monday this week, you never saw that drive. You never saw that market catalyst where it's just like oil takes off here. You just saw a fading action in overall neutrality. And instead of reclaiming that 200-day moving average, it's almost like the 200-day moving average just simply retreated and the price just simply went above it. And that's not a strong catalyst for a breakout.
Yeah.
When you are so neutral that the 200-day moving average simply fell underneath you over time. And so when I'm looking at this, I'm not surprised we see the big down day today. It doesn't change my overall bias towards crude oil. I'm still waiting on the breakout and I'm still waiting on the pullback following the breakout. But it does give me a little bit more confidence in that assessment that the breakout is probably not what you should be looking for, just given the fact that it has had no follow through. At any point, this tried to reclaim any intraday resistance level over the course of the last 2 weeks as we've been trying to break out of that 200-day moving average. It has had no follow through. It's tested above that 200-day moving average 1, 2, 3, 4, 5, 6, 7, 8, 9 times in the last 15 trading days. It is tested above that and simply could not drive above it. And then coming into the weekend, I think the bulls are just like, fine, we tried, we failed, we're capitulating, we're taking the weekend, we're going to go into the mountains to think about our actions, and we're going to come back and reassess the position, and maybe we should watch more of the halftime report so we stop trading like that. But the reality is I just never saw any follow through here, ever. Not on intraday, not on the daily. The bullish, there's no bearishness out there. That's not what I'm saying. I'm saying just the confidence in the bulls is obviously lackluster here. And it just, if the bulls are lackluster in their confidence in buying oil above 43, which historically is not over evaluated, then, you know, I'm going to be cautious there as well.
Mm-hmm. You know, this chart has been breaking down even further on the 5-minute intraday chart. Mark, are there any catalysts here? I mean, we had economic data come out this morning and whatnot, but I'm looking at the intraday as it was selling here, Matt, on when the market started recovering on some of the economic data reports we saw earlier this morning. This one actually has been seeing some pressure. Is there a catalyst, Mark, news?
That's the concern, Tim.
Yeah.
That's the concern, because oil traded down on the same news that happened in Europe last night. It was trading down in the same capacity. You see Europe start to open up right about right here. Europe opens up, Europe opens up here, UK opens up there. And so when the European markets opened up, and you can really correlate this with the chart on the S&P 500 as well, where once that European data started coming into the market, crude, the market indexes all started trading down on the intraday analysis, which is consistent with what they should do on negative economic situations. But the problem with crude is, unlike the S&P 500, where the positive economic data you saw coming out of the US today in both the flash service and manufacturing index, we haven't even talked about, existing home sales, which I'm sure we will get into with existing home sales was a robust report today. It was a very good report today. So you had 3 economic reports today that support the economy expansion argument within the United States, both in terms of manufacturing, service, and housing. And yet crude did not move the needle. The only thing that happened on these data points is you had upward movements in price get just smacked right back down. And so unlike the S&P 500, crude showed weakness throughout positive economic reports. It does further the confidence in my argument more than anything else, that I just don't feel the breakout, if we have it, is tradable. You got to see a trend develop here.
It's just so choppy. I mean, when you look at this chart, obviously, I mean, it's been fading upward here for some time, Frank. How do you read crude's chart, Frankie?
I mean, Matt pretty much nailed it. It's been for me really dull, and will continue to be so, at least going into next week. Any day you look at it, plus or minus, it's the exact same price as it was 3 days ago, right? So I agree with Matt's evaluation. I've agreed with him, for quite a while on crude. I have no problem with this as a cash flow instrument right now, but as a trading instrument, hey, maybe you're playing intraday and, you get what you get there, but swing trading, I'm 100% with Matt. I have been. I don't trust this breakout. I just am not interested. Like Matt said, I'm not bearish, but I'm not bullish, and I'm perfectly fine saying I've got no opinion. I've got,
honestly,
that's the nice thing about trading. You don't have to have an opinion.
If the Bears had more confidence right now, because the Bears are probably the least confident they've ever been in the world, like literally ever. They're like, we've been calling all this for 10 years. We finally got it, and the market's at an all-time high again, right?
Yeah.
The Bears are just not confident in any capacity. If the Bears had more confident, and I'm not just talking about crude, I'm talking Bears in general. If they were more confident, you would have more risk to the downside in every aspect of the market. It's not just that the bulls are so confident that everything is going to go up. It's that the Bears really, really are nervous to take bearish positions right now. I mean, let's just face reality, guys. How many of you are very, very excited to look at bearish opportunities right now?
No, I do it just because you have to.
You have to be ready, right?
Yeah.
And on those big down days, you're glad you have those bearish trades, even if it's just 1 or 2.
Mhm.
But you're doing that more as a hedge than it is as, hey, I am very confident in the failure of this support level. I mean, we've said over and over and over again, in this market condition, we're going to bet on support. We're going to bet on support. And so, and the Bears just lack a lot of confidence. But again, I would be a little bit more bearish on oil, and I think oil would be a little bit more bearish if the mentality of the market was not so historically dovish. I've never known a moment in my history, or a moment that I have studied in history, that would indicate more new participants in the market that hate bears. There's an anti-bear philosophy in the financial world right now, unlike I've ever seen. People are hating bears. They don't even know what a short is, and they hate bears right now. In fact, it's so bad, I might go contrarian. Nope, I was going to say something bad about Marty, and that's not going to happen. But it's just it's an anti-mindset right now. That's not a reason to buy for me in crude.
Marky, is there any fundamental update on crude this week? I mean, I know rig counts come out on Friday, usually about right now, I believe. Anything in the news or fundamentally that you're seeing differently?
Nope. It's more lack of a positive catalyst than it is a specific bearish catalyst. I mean, hey, economy's not very good. It's not very good here. It's not very good in the world. we have different areas not reopening. COVID is here in the United States. There's troubling data in the thing. Oil doesn't get the benefit of euphoria and Fed money pouring in at liquidity rates that are beyond insane. It has to survive on fundamentals. And without lack of a true positive catalyst, and we've been talking about that for weeks, without a true reopening or something like that, directional plays just aren't there. But there's nothing like nightmarish or bearish catalysts. It might go down to a different level. I mean, volatility on a lot of oil instruments is not up at all. So a lot of nothing to see here, a lot of nothing to see here.
Yep. Let's take a look at gold and silver here next. Quickly work through those. Then I want to talk housing data right after we talk about the dollar. Gold, obviously, I mean, the chart has dynamically changed if you're just reading candlesticks. Frank, I'm going to get your read on that because I know historically you are just a pure technician in that regard. How does this chart, kind of read for you right now, Frank?
We're basically in the middle within the longer trend. Right. We have our pullback. We establish our support level. We see upward movement. We know where the buyers were willing to come back in. They came back in, pretty decent move. Not surprisingly, aren't able to make it back up to that swing high. And now we're selling off. So basically, we're now kind of seeing the pullback within the pullback, right? At least that's what I like to call that type of a pattern where we're still above support. We are now below intraday resistance. At least at this moment in time, we've got a lower swing high, right? And I'm not going to get too crazy about that, but that is what's happening right now.
I got you a whole bunch of Fibonacci lines.
Got a whole bunch of Fibonacci's there. That's got to help.
Yeah, got a whole bunch of Fibonacci lines.
Got to hit one of them.
Got to hit one of them.
Yep.
See, there's some support right here. Right there.
Yeah. Just by in that general ballpark, you'll be all right.
Yeah, just right there.
So it's a tough read on the chart at this point in time. I said it last week. I maintain it this week. My expectations are we go back into the normal-ish gold routine where you pop and have some sort of consolidation, pullback drift type of thing before we ultimately create a triangle or a breakout pattern and do it again. I remain bullish on gold. I am on board with the bullish argument that you guys are all on board with 100%. Big picture wise, short picture wise, from a swing trading perspective, I think this is going to be a little tougher than it was, although it was pretty easy for a while on that break, right? That was pretty easy to trade. I expect sideways action, maybe a little more drift to test that support. I don't really expect this to be a great directional environment from a swing trading perspective for the short term.
That weekly chart just makes it better. In fact, you could probably make an argument.
Sexy. I'm sorry.
You could make an argument. You should always analyze gold on weekly candles. I mean,
you could make that case. Yeah, absolutely.
Because it's just cleaner. I mean, it's just a cleaner chart.
If people are looking for a clean entry on the daily chart, they're going to be waiting for a very long time, in my opinion. That daily chart is getting fairly volatile right now. And, from a long-term investor perspective, you're looking at this weekly chart and you're saying, I don't care what happens on that daily chart in any capacity, and nor should you care about it. And that should not just be said about gold. That should be said about any long-term investment in any capacity. You should not be fixating on daily charts on long-term investments because you're just going to drive yourself crazy more than anything else.
Yeah.
Daily charts are much better for trading instruments, swing trading, day trading environments and whatnot. But in terms of the long-term chart, this looks sexy, guys. I mean, it's volatile, but you got an inside candle slowing momentum versus last week versus this week. I think as long as gold maintains that 1900 level, which in my opinion is a fairly important weekly support level. It's right there where the 9 EMA is, but it's also, Frank talked about it being in that zone. And, I kind of drew the Fibonacci's as a little bit of a joke, but Frank, you're right. Whether you're drawing your Fibonacci and looking at this movement here, capturing that high base, you're talking about a 38% retracement. If you're talking drawing the Fibonacci from the breakout channel, you're talking about a 50% retracement. So 38 to 50% retracements are nothing new to the market. These are pretty standard type moments in time, and you shouldn't overreact or capitulate to that from an investor, because an investor looks at those moments in time as buying opportunities. But from a daily perspective, if you're the new dude in the room and you have not participated in the gold run up, because our bullish gold argument it's been around for a long time, but
Yeah.
it really pivoted in October of 2018. And that's kind of when we started really pushing the gold thesis, not just the fundamental thesis, but we were seeing reversal patterns, the technical thesis as well. And so if you have not participated and made money in that environment, and even in the last few months haven't made money on gold, because again, you're more new to the gold analysis than anything else, not because you missed it, just because you're new to it, then you probably need to wait a little bit. Unless it's an investment, then that's a different discussion. But if you're looking for to be that market assassin where you pinpoint your entry on something, you're going to be waiting for a while here on gold. It's just going to happen, guys. And it is not a bad thing. It is not a bad thing at all. I would love to see, and I'm not joking, a month to 2 months of consolidation in gold. I would love it more than anything, because then that makes that next leg that much stronger. So my take on gold, you guys all know it, it's not going to change. It's based on a fundamental currency backdrop, but technically is what I'm talking about here. And I think if you're looking to add, you're going to have to wait a little bit on gold.
Yeah,
No, I think that
agree.
consolidation would be great, Frank.
I do
really
too, and
do.
I
A
expect
couple questions very quickly. A couple questions, because guitar asked.
Yeah, I
I want
wanted
to
to
get
bring
Mark.
that one up. Yeah.
Yeah, it's a great question. Okay, we went streaking when gold broke out and silver broke out. We went streaking, and I would say, let me ask you the question: when you're looking at GLD here or GDX, GDX is my favorite when you're doing like covered calls is GDX, but a lot of people really like GLD as well, right? GLD is just the spot precious metal ETF that is gold. They're looking very similar, so the analysis is also very similar. What do you guys think? Is it like, if our projection is basically some degree of neutrality over the course of the next month, 2 months, which certainly could happen. I'm not saying it's going to happen. Obviously, there's a lot of time between now and then,
Right.
but it certainly could happen. I mean, this is obviously a cash flow type environment now that we're entering into the gold ETFs. When do you start writing covered calls? When do you start covering the position on a long-term investment? Because we're also sitting closer to support than we are resistance right now.
Right, absolutely. Philosophically, I think it's a good time to start scaling into covered calls, if that makes sense. So if you've,
You have 500 shares, right?
Yeah, I've got 500 shares, right? Two, or right, something along those lines. So you still have some availability to sell if we, just fire back to resistance, which, I don't expect it, but it wouldn't shock me. I mean, it's still strong and the argument's still strong. And I still believe that we will get there. I just don't personally believe it's going to happen, in the next couple of weeks. Might be wrong though, right? Wouldn't be the first, won't be the last time. So I actually think it's an interesting time, as opposed to going all in on covering, and maybe not specifically today, but just generally speaking, I like the idea of starting to scale into the covered call side.
Yeah.
I have a different angle on that, but Marky, what about you?
Go ahead.
Well, I mean, about a week ago, I said, well, it was a week ago, I think the highest probability scenario, and that's all you can base things on, right, is a very broad trading range.
Yep.
Whenever you have a blow off candle, like you had, what was it, 10 days ago or so, it's very common for the market to try to get a feel for things, right? And so you'll have support tested, resistance tested, and it takes a minute for it to get direction again. And there's a lot of volatility that occurs in that thing. So a broad trading range remains for me the most likely scenario over the next 2 to 4 weeks. So, and that's a good covered call scenario. But the only note of caution I'd give on this is some individuals, specifically, if you're just trading or short-term or even medium-term position trading, no problem on a covered call. Some people have a fit because they never want to let go. The people that never, ever want to let go, if they lose their shares, you probably should sell a much higher delta so that you can
sell
have
a 20 delta.
So you can have a roll up and out plan once it hits a certain level. I mean, that would be the one extra note of caution I'd give.
If you're concerned for whatever reason, you don't want to let it go because you're tied to the investment and you love the investment, or you don't want to let it go because Long term, you might have some capital gains type concerns. 100% understand. You just need to adjust your system to fit those needs, right? Instead of selling a 40 delta contract where you're going to have to, make decisions on management a lot more, go out of the money a little deeper, pull in a little bit less cash flow, have a little bit higher probability, and sell multiple different levels. So there's always a way to go about it. But Tim, you said you had a different little take on it. What was your take?
Yeah, I personally am not covering gold right now. I have no criticism for what you guys talked about. In fact, I do believe that will be the most likely market condition we have. But my thing with gold is that, especially recently, it feels like we get these burst days,
Yeah.
And the reason why I have gold in my portfolio is not for cash flow. I have
Yeah.
other instruments for cash flow. I do naked puts on other stocks. I do other, kind of trades on different companies and whatnot. So I have stuff designed.
You're
for cash
saving
flow.
money in gold.
That's
is
right.
what you're doing.
My gold
Yeah.
holdings, I don't want to be called out on. I'm not
No,
worried
that's a
about losing
savings
out.
position for you.
Right.
It's a
Right.
completely
That's more
different
than fair.
analysis. What I was going to say, because I haven't really answered the question in my way yet, I love neutral conditions for covered calls, but I don't love writing the covered call when you're closer to support than you are resistance. And I think what would end up happening a lot is you will get frustrated because support's going to hold. It's going to go back up to resistance, and it's going to puncture into the option you sold. So for example, take a look at GDX here. You're at 40.91 right here. You got overhead resistance of 45 by 45.78. You got support by 40 by 39. That's kind of your range. So you're closer to this support level. Let me kind of come in. So you're closer to this support level right now than you are that resistance level. And you can kind of see that with the RSI as well as it's coming down into, underneath that 50 handle as well. So to me, if you're coming into the cover call and you're saying, well, I'm going to go to that 28-day contract, and let's just go to let's go to the deltas here so you can see the deltas, and let's go out a little bit more, 10 strikes. So let's say you sell that 44 delta contract. Well, what contract are you getting? Yeah, you're getting $150 of cash flow, which is really, really good for GDX. And the ROI is going to be significant. But I promise you, if you sell a 42 contract, you're going to have decisions on management. Yeah. Absolutely 100%. So yeah, the probability scale says that you have a 44% probability of that strike price finishing in the money. But a strike price finishing in the money at expiration is a vastly different conversation than what is considered probability of touch. Yep. And it's the probability of touch that you have to be concerned about in a covered call, because that's what you're going to have in terms of making that management decision. And this is what happens when you write covered calls in neutral trends, when you're closer to support than you are resistance. For you to even go out to even sell at resistance right now, you got to go out to the 45 strike price, which is a 24 delta, and you're only bringing in $65 in cash flow, which is fine. I mean, on a $41 stock, $65 in cash flow, you're getting around 1.5% on cash positions. That's nothing to scoff at with the 24 delta. That's perfectly fine. But you're also selling right at resistance there, and you're only getting 1.5% to sell right at resistance. Whereas if you just show a little bit of patience, let this trend develop, wait for it to come back up into that 43 to 44 level, not all the way up to 45, but just in this range between 43 and 45. At that point, you can sell above the breakout channel, thus betting that resistance is going to hold. And if it does break out, you have a very easy management decision in saying, okay, either one, I'm going to let it get taken from me at the higher price point, or two, I'm going to remove the hedge of the covered call from the equation and then go streaking. So where you make that decision to write the covered call is very, very important, because it goes to the management decisions. If you write the covered call today on gold or GDX closer to support than resistance, you're going to have those management conversations. If you write it towards the top end of the channel above resistance, that management decision becomes infinitely easier, in my opinion.
Mhm.
Oh yeah.
Yeah, no, exactly right. And that's where, from a mindset perspective, learning how to manage covered calls, when to put them on, when to take them off. And I even love Frank's little tidbit earlier where you can do a partial covered call. I mean, if you have 300 shares of GDX, you can do one or two. All of those tactics you guys just broke down. I love the analysis there, Matt. That's kind of, those are advanced covered call techniques. I think everybody needs to do that, learn how to do that if you're going to trade covered calls. It's one thing to just stick a 40 delta out there when you're new as you're learning. But the longer you do this,
That's not good enough the longer you do it, though.
no,
Right.
You
there
got to
are
get
other
to the point where you
tactics.
can break down the subjective conversations you have to have when you're writing those things. This is the same thing I said to Mark one time when we were talking about where to write the put option. And I said, Mark, if you write the put option right there at support, the only way you're going to get into the position is if it violates support, and you don't want to be in the position at that point. So write it right above support. It's the exact same conversation we're talking about in when to write the covered call, because it goes to that management conversation that you're going to have.
No, and what you were just talking about, people, regulars in the commodity report will know what you were talking about. We call the rule of three, and it's dividing a range into equal thirds, and then developing rules on what you will do or not do, depending on where price is in relation to that range. And so, like, as we teach in the commodities report, if it's in the lower third of that range, we don't do bearish actions, and selling a call
is a bearish action.
And so bottom third of the range, we don't do bearish actions. And so you just, for lots and lots and lots and lots of reasons.
And I like that, Mark. I like that if A happens, then I do this. If B happens, then I do this, because it does. One of the biggest risks we all have, guys, as traders, is the emotional conversation we have within our own selves around decisions we make in management. And if you have that plan set in place, if taking GDX as the example, as long as GDX stays between 39 and 42, I'm doing nothing. I'm going to hang out. I'm going to go to a Wuhan pool party. I'm going to just do nothing. Okay. If it goes into the 43 to 44, at that point, I'm going to write the covered call. If it breaks out of 45 or 45.78, depending on how you see that categorization of that breakout, then I'm going to remove the hedge. So I like those predetermined plans at specific price points, and then the decisions are really already made. You just got to kind of wait to see it.
Yeah, love it. Love all of it. And by the way, Mark, you are doing that live commodity report here just like an hour and a half, I believe, right? You do it.
At 3 o'clock Eastern, that hour before the market closes for the week. We do about a half hours on commodity, and then we open it up for a general trading lounge Q&A for any last minute trading decision pros members have, any charts they want to look at. It's just not, it's just that. And let's be honest, I will always do that because our pro members give me some of the most amazing trades to do. So like I make money because of the comments they make. So
I'm telling you, there are some really, really good traders in the tackle trading community.
Yeah, we steal your trades and we are unapologetic for it.
That's right.
We do not apologize.
No,
we do say thank you.
We do say thank you for sure.
That's right. That's right.
But we do not apologize.
Let's keep working through the markets here. I didn't see anything new to update on silver, kind of same conversation. Let's move right quickly to the dollar if we can, unless you see something here, Matt, you want to talk about? I don't see anything really different updating. No.
I do see, if you were looking to do something here on silver from a trading perspective, I do see a much cleaner trigger on silver from a trading perspective than I am seeing on gold.
I was going to say the same thing. I would agree with that.
Gold is in this range of volatility right now, and silver has volatility. Silver has more volatility than gold. But when you're looking at the tightness of that intraday resistance breakout, and I know we tested above 28 one time on Tuesday and came right back down, but if you see a trigger above 28, I think that could be tradable.
I think it could potentially. I could definitely be open to the conversation.
There's probably better trades out there, no doubt. But when you are looking at this, silver has held up a little bit over the last week and a half, guys. Silver's really kind of stuck in that range between 26 and 28. And when you're looking at this from an intraday perspective on silver, you kind of see that range between 26 and 28 with that one tick that we saw that one day, the daily tick we saw get above 28 up there to 28 and a half. But if you can get above 28, I think it's a quick journey to 30, to be honest with you.
Yeah,
Yeah.
I think there's a very good chance of that, as long as that hiccup, if it wasn't for that shadow on that one candle, we'd probably really like this as a breakout, right? At least I would. That one will be something to keep an eye on, that price point.
I still like it.
I would agree that above 28 certainly could be an interesting place, a little break up there.
I ultimately also believe silver will break 30 ultimately, though. So
I do. Yeah,
my long-term view on silver is I'm still bullish the same way I am on gold. Silver is going to have a little bit more random, crazy days in it than gold will, though.
Yeah, probably. That's usually silver's MO.
Yeah.
Yep. The dollar next here, Matty. You were talking about earlier the European economic data and all that kind of stuff.
Oh,
And
before we leave commodities, rig count just came out, a plus 11. That's the first
Wow.
substantial increase we've had in 3, 4, 5 months. I mean,
In a
forever.
while, yeah.
So
Get ready for a bear trigger on the intraday chart.
yeah, looks pretty good actually.
Seriously, boom, boom, boom. Eventually that's going to break, but look at that cone developing. Volatility is expanding on the intraday chart.
Plus 11 on rigs, Mark. I mean, that's a sign of expansion, but obviously more rigs getting open. That's the first time in how long that they had a build in rigs?
It's been a while.
I think there was 1+1 somewhere a couple weeks ago.
Yeah, there was. Yeah, a couple weeks ago when I was here, you brought up the +1, but yeah, it's rare. It's not been this number for a while.
Justin asked a question: does silver and gold correlate somehow with AMD? Justin, I would have to dig into that a little bit, but I would say off the top of my head there would be some silver correlation, maybe not necessarily as clean on gold, but I would say just off the top of my head there's probably some silver correlation, but I would absolutely have to dive into the data a little bit.
Give me a quick peek at the dollar if you can there, Matt. Pretty good green candle. Obviously, European economic data was weak. It started to actually put pressure on the euro. The dollar started to rally on that. The chart's still bearish to me. I'm still bearish, but you have to at least acknowledge the fact that we, are having a little momentum change in here. It reminds me very similar to what we saw there in mid to late June, Matt, when it kind of chopped for a few weeks. How are you reading the dollar right now?
Boring.
Yeah.
It's boring, but I do agree with Tim. I think there is a bit of a momentum change that has to maybe take you a little bit off of where you may have been bearish before. I'm not saying you're bullish necessarily, but I do think you should be less bearish off of this week's price action, in my opinion.
We're going to upgrade the dollar. I think that's fairly clear here. It's not just the volatility shifts and the momentum shifts. That failed breakdown, I think, is fairly significant from earlier this week. And
yeah.
I do believe the market is having a very difficult time interpreting the Fed right now. And some of that is a lot of people in the market are finally waking up to who the Fed is. And I'm just going to leave it at that. But I think and I'm not basing this on what the market is, even though the last 2 moments the Fed has talked, I have said in the halftime report that day that the market is misinterpreting the Fed here. And I do believe the market is misinterpreting the Fed, but even the Fed this week stated that they're trying to find a better way to communicate with the market regarding monetary policy, because everything the Fed says, the market hyper analyzes. And so I do think the market is trying to figure out who the Fed is, number one, and then trying to interpret their policy in a historical fashion that is very, very, I don't want to say vastly different, but it's different in comparison to post-COVID than it was pre-COVID. So I think the market's trying to figure out the Fed, to be honest with you.
I had my first jolt of adrenaline all day when Matt said, people figuring out who the Fed really is. I'll leave it at that. I so wanted to egg him on to get him on a rant. Like it was the first time I've woke up all day long. But
like Mark was so excited. He thought he could get me today, but no, I'm chill today, bro. It's a Friday afternoon. I'm going to hang out with the amazing coaches, and I get to talk to Coach M and Frank and Noah and Gino and Tyler and Marquise, and I just get to hang out with all the amazing people of tackle. No, you can't get me on a Fed rant today. I'm too positive. I'm too positive
Not
today.
today.
There is nothing y'all could say to me to get me riled up today. I am full of just unification and positivity and love and passion, and I am hoping
Dude,
for the best of
you
mankind.
always are, man.
Someone watched the Hope and America Needs to Come Together Joe Biden speech
I
last week.
did, and I'm
Oh.
not going to be shy about it. I thought it was a wonderful, I thought it was a well-written speech. I thought it was wonderfully delivered. I have been a professional speaker in my life, and I'm going to tell you right now, it is very, very difficult to weave in policy, which is more analytical mindset, into a story-driven speech. I thought he did a great job in intertwining policy into the emotion and the story of Joe Biden. And I'd love, maybe I'm a geek. Listen, I cried when that boy who struggles with stuttering, because I've had some pronunciation things in my speaking career, to the point where I literally had a professional speaker one time tell me, "Oh, Matt, you would be so much better if you went to a speech therapist." And I won't tell you what I told him. You guys can just take that to where you want. I'm sure you could figure out what I told him. But when I saw that young man get up there and show the courage that he showed, I got passionate. I did. I got hopeful. I did. And I saw the best in humanity. And so, yeah, if people want to sit there and say, "Oh, yeah, Matt's just being hopeful," I am. I want the best for human society. So, yes, I am hopeful today. I think there is more that unites Americans than divides us. And if we can focus on what unites us instead of bitching and moaning about the 5% that divides us, we're going to be a better country.
Sure, I would agree.
I might be able to get you on a rant with this question, though, Matty. Michael Donnelly says, does the dollar and gold still have an inverse correlation?
Challenge accepted,
Maybe.
Michael.
I mean,
JT, there's not a politician that wrote this. You're right. Biden has professional speech writers the same way Trump does, the same way Obama did, and the same way every president in the history of mankind has.
mm-hmm.
That's why I said written and delivered.
Yeah, Mark, just embrace the happy Matt. He's in a content, happy place. He's found a zone here. Embrace
Sorry.
it. Don't try to.
I'm sick of the nonsense of people just sitting there hating on other people simply because they disagree with a little bit of what they believe. I'm sick of it.
Tim, have you met me? I'm a dick.
All right. Yeah, the haters, player haters ball kind of thing.
There you go.
Yeah,
Hey, Cody had to step away. I'm going to rein it in for him.
Yeah, Frankie,
I get it. We need more positive people in America.
For sure.
I do. Whoever the president is for the next 4 years, I would like the society to take a collective chill pill, and realize we're all human beings. And the whole 95% that unites us.
See, that's how a good Republican responds. Brian, good conservative. I love Brian. And see how he comes back in, but the A's are still in first. That's right, Brian. The A's are still in first and playing good ball.
Hey, there you go.
I love it. I love it.
I'm trying to get me all negative today.
Not going to happen. Let's talk individual companies now here, boys, as we transition into the next part of our show. Deere earnings, Foot Locker earnings, Ross Store earnings. Matt, and I do want to have a conversation about splits and Apple and, obviously Tesla crossed that $2,000 mark. Let's start with the earnings roundup.
I got a message for financial Twitter later today on splits.
Good. I think I know what it is, but I think it's going to be fun to talk about. Let's start with the earnings roundup, Matt. Deere first, if we can.
Yeah, let's go with Deere. That was probably the biggest name in the earnings space here today, and you got to love the performance on the breakout. Well, I want to get Frank's take on that breakout here. But Deere came in. This was a really, really positive report, guys. There is some cold water I'm going to throw on it a little bit, but overall, I'm taking Deere's report as a very, very, very positive report. Number one, they destroyed earnings per share. Absolutely destroyed earnings per share. Love the $2.57 versus the expectation of $1.30. They came in at $8.9 billion versus the expectation of 6.6. They did see 11.1% decline in year-over-year revenue, which is easily understood. But the kicker, and this was a little bit weird to kind of look at, they did see an increase in guidance. Now, the EPS beat and the revenue beat were really positive. That was the gap, and the run is what you're seeing. The increase in guidance is a little bit weird to think about because it's positive, the increase in guidance, but the increase in guidance was we're not going to lose as much money as we had initially thought we were going to lose. And so where they were expecting, 15% contraction in certain areas of their business, they were expecting 30 to 40% contraction in other areas of the business. That only came in at 10 and 25% respectively in terms of guidance. So the guidance improved, even though it's still nasty. The guidance did improve, but the beat on EPS and revenue numbers were legit on Deere. A really good report from John Deere.
I mean, Marky, this kind of company, obviously we're talking about industrial, people are going to need to buy high-end equipment when they're doing that kind of work. Tractor company, very famous US brand, but it does reflect a lot of strength in my opinion as well. This is not your kind of play up here though, Mark. I mean, is there any cold water you'd throw on this report? I mean, Deere beating earnings, top line, bottom line numbers.
I thought it was a much better. I think it was a genuine surprise to the marketplace.
Was it?
Let's call it what it is. Earnings estimates are always lowballed. Like it is the game Wall Street plays. Low estimates. That way, when it beats, everyone's like, see how amazing things. It's a game. It's crooked. It's corrupt. I thought this was a genuine beat. I thought this was much better than anyone anticipated. And so from a trading point of view, that's some general euphoria because I really do. I think this was a genuine beat, beat.
Mm-hmm. Frankie, if you have an upside move like this where you gap out on that kind of candle, I mean, what are we up there, Matt? 5.5% here today. That's
about 5.5%, but there's not a lot of selling here. That's the thing.
No, it's a strong day. I mean, the issue, comes on a breakout like this, because this was pretty clear, right? We broke out from a risk to reward perspective. It becomes a fairly costly trade, in my opinion, with where it is right now, at least a swing trade, because you got to get your stop loss way down there in that 190-ish area, right? And I guess that's eye of the beholder, but it feels a little bit expensive to me. I'm the school of thought I'd love an opportunity, and it definitely caught my attention, like Mark's and Matt's. Let something develop, a little high base, a little retracement back to that breakout point. Let the 9 catch up and spring us. If it wants to run from here, I'll just cheer for it because I know somebody's got it. I'm happy when other people are making money, but for me, I'm going to need some development. But you do have to like it technically. It's very strong technically. Just entry wise, just not going to be my cup of tea.
Mm-hmm. Did you see the NVIDIA breakout today?
Absolutely.
We reviewed their earnings earlier in the week, Matt. Kind of a similar type of thought there. You got to wait for it to do something different. Now, NVIDIA, it happened pretty quick there, Frank. I mean, only like 3 or 4 bars until we finally broke above another pivot on this one. So that one was pretty quick. I mean, can it develop that quick for you to get confidence?
Absolutely. Absolutely. A little
3-day flag into the 9.
Yeah, absolutely. That would almost be like, sign me up for that. If John Deere does that, I'd have a lot of interest.
Yeah, Deere, I think is going to go on a watch
list. But that's a nice.
You might not get that on Deere though. I mean,
no, it might just run, and I'm okay with that. I'm.
Me too. I guess the difference for me, Frank, I want to see if this matters to you on the Deere analysis versus the NVIDIA analysis. One of the reasons why I was so bullish on the potential breakout of 500 on NVIDIA, and I literally. When we were analyzing, Tim, I was all over this. Like,
I heard you. Yeah, I caught a little bit of the halftime report yesterday. I heard you guys going on about it. So nice.
You had a very similar type price movement post earnings that you're seeing on Deere, but unlike Deere, which broke up above that $200 level, NVIDIA gapped up, ran into $500, and so to me it was like, okay, you got that very significant number of 500 right there. Wait for it to come back a little bit, and then the breakout of 500 was to me was going to be really strong. I didn't want to see it run the day after on NVIDIA, because at that point you're overextended in the trend, you're overextended against short-term moving averages, and it becomes a little bit more difficult. With what you're seeing with the pullback you saw in the 3 days coming down into the 9, I think you had that nice little bump, a little bit of consolidation coming into that potential breakout of 500. And I thought just that was going to be a lot better than if you just saw that run, on the announcement. When you're talking about Deere, a little bit of a different beast here, given the fact that you broke out and run. So you broke out on the intraday overnight analysis, and then you ran on the cash open, very similar to NVIDIA. But the difference is NVIDIA was a little bit overextended coming into that announcement on the earnings, and they were breaking out and gapping into that significant whole number. Deere, on the other hand, was consolidating coming into that breakout. It broke out on the announcement and got above that $200 level, which is one of those significant whole numbers, the same way 500 is. I'm not sure you're going to get that 3-day pullback. Although if you do, that's fantastic. I love it. That's a great trade setup. I'm just not sure you're going to get it. I think this one, unlike the NVIDIA one, I did not feel the NVIDIA one could be momentum traded. I think Deere can be momentum traded here.
Yeah. Oh, I would absolutely say it could. I probably wouldn't do it, but that doesn't mean
No,
I wouldn't
it
agree.
doesn't fit who you
Yeah.
are, right?
Yeah, exactly.
Yeah.
You know, I'll be patient. I'll get the 3-day, high base 3-day drift.
You'll
to the
get that, or
down,
you'll get nothing.
or I'll just, but
Yeah.
I mean, I wouldn't, I mean, that's strong. I mean, breaking into all-time highs, we still have some time left, but it appears we're going to close above 200. Again, my issue with buying it on Monday morning would be more from a risk reward perspective than do I think it can run perspective.
Mm-hmm. Well, but bar by bar, you can probably make the reward to risk work. I think it might just come down to personality too, Frank. You don't really chase momentum trades like that, do you?
No,
Like a clean setup.
not my kind of thing.
Yeah. No, I love the report. I think it's got to be on a watch list. And man, that NVIDIA play this week, I mean, that really develops it. It kind of shows why we break down earnings so much. I mean, that's the thing. Post earnings, you get all these different patterns and setups that can develop that are just beautiful things.
I mean, I think earnings is critical, because when a company has a good earnings, like Target, TGT, like Target wasn't on my radar at all. It's not one of the stocks I follow, but it has such a great earnings that I am more prone now to do bullish setups on it if I have a tiebreaker, right? Let's say I only want to do one trade in discretionary, and I got chart over here. They both look about the same. I will, by tiebreaker, always go to the company that smashed earnings, because there's more chance in my head, at least for my tiebreaker vote, that, hey, there's a lot of great sentiment here. And so earnings are, it's, even if you don't trade earnings, I think as a trader, it's really worth the time investing in to get a feel for those companies you follow.
Yeah, no doubt about it. All right, let's keep talking other companies here, Matt. I saw Foot Locker and Ross Store also had their earnings today. Give me the numbers on either one of those that grabbed your attention.
Foot Locker just raw numbers came in at 0.71 cents a share versus expectation of 69 cents. 2.1 billion versus 1.3. Very good beat, healthy beat on revenue, up 17.1% year over year. Not a company I track nearly as much as, say, a Deere, but lukewarm earnings report. So, and again, I'm just giving you the raw numbers here. I haven't looked into the deep analysis at all.
Frank, can I sign you up for a short underneath support here? Is there enough?
It's on my radar. What I'd want to see is it to come to support, bounce, create a lower high, and then take another run at it. So if it were to break tomorrow, or I guess Monday, you couldn't sign me up. If it were to drift down there Monday, Tuesday, rally up into those averages next week, then you could sign me up. So I'd want to see that development here, but that's a pretty clean support level. I wouldn't buy it if it broke that support level. That's for sure.
Yeah, that's right. Ross Stores, Matt, the discount, actually box dealer right there in retail. Obviously, they had their earnings here as well today. ROST, when you're ready there, Matty.
Which one?
Ross Stores. Did we want to look at that one?
Oh, I'm on seasonality adjusted political election season stuff. That has the ability to trigger me far more than Mark trying to get me triggered on the Fed today.
Listen, no triggering today.
If you want me and Mark on the same page in triggering, just get us
no
ripping on
Friday.
Seasonality for a second.
Yeah, no trigger Friday. We're not doing it. Raw store numbers, Matt. Another retailer. It's been a week of retailers, by the way. Obviously, we've been talking about them all week.
Yep.
What did you see in Ross?
Yeah, Ross Stores came in at 13 cents a share on the negative versus the expectation of a negative 31 cents a share. So they, again, par for the course with these types of retail box chains. did bad, not as bad as what could have been, right? I don't think we should start the massive bullish thesis was, well, it's just not as bad as it could have been. Still terrible, just not as good. So it's a stay away from me from that perspective on this store. But in terms of revenue, 2.7 versus 2.7, ho-hum, revenue declined 32.5% year over year, which is a little better than what we saw as similar companies earlier in the earnings season, but we're also talking different data points. So par for the course with what we saw with some of the other ones. I didn't see anything to really aggressively be like, hey, this is a good buy, this is a good sell, this is a complete stay away from me.
I mean, this company that used to pay a dividend pulled it, had to. They're having pretty poor performances. I look at a chart that's just choppy and a mess. I have no interest in this stock right here, Frank. Am I missing anything? Is there an opportunity one way or the
If
other?
you're missing it, I'm missing it too. It's kind of mud, right? And when there's not a lot of clarity, that's where, I think most of us can get in the most trouble because our bias can really shine through, right? If I like Ross, I can talk myself into going long. If I don't like it, I can talk myself into going short. And really, whatever side I'm on, it's probably not a very good argument, at least as of right now.
Yeah, no, I see a neutral mess. What I do have a bias towards are these next two companies we're going to talk about. Matt, we were going to have a conversation about splits, and part of this was based on some commentary you've seen recently, some opinions you've seen out there in the financial world, the ethos, the conversations happening on social platforms and whatnot about how splits are supposed to work. Now, we've got four coaches here with 15 years of experience each here, been trading a long time, seen a lot of splits here, guys. We also have our perspective on it as well. Matt, Tesla's been a juggernaut. It's up above 2,000 now. What are we, 220.85 right now?
My true intentions, I just wanted to bring up Tesla because it did achieve that $2,000 mark.
Somehow, Tim, you found a way to lose that bet.
See, I don't get it. Like, you had him over the barrel and you let him off.
Oh, I still won the bet. So
no, you lost because you're constantly getting
You're
mocked
America
now.
declaring war in Vietnam and just picking up your guns and going home.
Yeah.
No, you didn't win.
My side won.
Far worse than what you historically would have been if you would have just lost if it went to 1,000. Somehow you turned a winner into one of your biggest losers. I don't get it. You can keep crowing about how you won, you didn't. But what I want to say very simply this. I've seen a tremendous amount of hatred on Tesla, not from Tesla bears, but people in the financial media, Tim, not just the Twitterverse and the Facebook world. I'm talking the financial media about ripping on Tesla, being the poster boy for peak euphoria and craziness and nonsense of 2020. And I'm not disagreeing with them on the fundamental nature, but what they have used over the last 2 weeks is utilizing the split, the 5-to-1 split Tesla announced, as making fun of new generations who don't understand splits, and they're doing it in their sarcastic peak euphoria. But what I haven't seen in that same vein of thought is every one of those exact same people, which are most likely investors in Apple, not criticizing Apple for the exact same thing. Post-split, Apple is up over 25%, up 3.7% today. It is a juggernaut. It is running aggressively post-split, and a lot of that is on the backs of the 4-to-1 split decision. But there's been zero criticism on Apple in any capacity, and everybody and their dog is coming out of the woodworks just ripping on Elon and ripping on Tesla and ripping on new generations for peak euphoria nonsense, but they leave Apple alone. Be consistent in your analysis. And if you're not, stop listening to those people. I've had to unfollow a lot of people, and some of them that I respect simply because they're jumping on the bandwagon of everybody else in Twitterverse and Facebook world and social media, making fun of Elon and making fun of this and sarcasm that and sarcasm this. Guess what, financial Twitterverse? It's old, it's boring, it's stale. You're not Dave Chappelle. Stop trying to be that. Be consistent in your analysis. If you're gonna rip on Tesla, that's fine. I have the same concerns that you do from a fundamental overvalued equation, but you can't sit there and rip on Tesla post-split and leave Apple dry. Be consistent.
Mm-hmm. Does it change the analysis here, guys, in the short term? Because I think a lot of new investors out there were excited about getting the idea of Apple at $100. Now it's going to be Apple at 125 after running 25%.
It was never going to be Apple at $100. Nobody thought it was going to be Apple at $100. Like, no, that was not going to be in the cards. Apple was going to run post-split the same way Tesla was going to run post-split. These were two very easy analysis. I honestly, they were two of the easiest
they were going to run
in the market.
I mean, of course they were going to run post split. I mean, if you had a bet against your stupid brother that Tesla was going to hit $2,000, you knew it was going to run post split. So you would have like hammered it to him and mocked him for the rest of your life.
I'm actually surprised it didn't hit 2,000 sooner.
You know, like post. Listen, this is 2020. When something gets going on a legitimate news event, there's no limit to where it can go. I mean, we're in a video game mode, and you got to recognize that post split in 2020. If anyone splits in the coming months, you got to just kind of blindly buy that. Like, I think it's worth the risk.
Mm-hmm.
So,
what have you guys seen?
I
once
wouldn't be
happens?
chasing it this close to the actual split.
no, I'm talking about a new company.
Yeah,
like,
yeah.
Someone
Oh,
that hasn't
yeah,
like,
Especially a popular
Yes.
company amongst the bases, right?
absolutely.
So I think we need to look at this and start thinking about it long term from his post split performance. But I don't know, guys. Now that we're getting close to when the split is actually happening on Apple, I mean, you're talking what, the 31st, or you're talking a week from Monday? Is that a week from Monday?
Week from Monday. Yep.
Yeah, I think
Okay. And on Tesla, you're talking on the day after. So you're
No,
talking
same.
Tuesday.
Same.
Oh yeah, same day. Okay, so August 31st, same day. Don't you have to pull some of the risk from the equation?
I think so. You know, when I was first coming up, and this was a while back now, you know, I was kind of taught that when stocks announce splits, they oftentimes run. And then once the split comes through, they tend to sell off and consolidate. Now, we live in 2020, right? So all bets are off. But I'm really interested in seeing if that general pattern holds.
By the way, if Tesla finishes at $2,100 per share on that split day, which is only $15, $14 away, so it's probably not going to happen. But that 5-to-1 split would put them, you know, the infamous tweet he had going private at 420.
Oh, really?
They would resplit it back to $420.
That would be so funny. And no, Elon did not conjure that one up. That would just be random. But I don't know. I think listen, if your analysis was post split, you know, I'm taking advantage of this in the short term, I think you've achieved whatever you were hoping to achieve and then some with both Tesla and Apple's price performance post split. I think this gots to be one of those moments where you're like, you buy the rumor and you sell the news. You buy the announcement, you sell the actual execution of it. I think this is one of those scenarios. And if Tesla runs on top of that, I do think you're going to have a wonderful trade set up post split too.
Oh, yeah.
I just think we should take the risk out of the equation and wait to see how the market really kind of performs post split.
Yeah, I'm with you. You know, and the last thing I've got on my radar here today, guys, is charts. You know, Frank, you coming on a Friday, you got a bunch of stuff that you want to go through and break down. I know that you run that Twitter account just fantastically throughout the week, and you find the charts all the time. Frank, what do you got here today for us?
Oh, man, I got all sorts of fun things today. So maybe I'll just take over. So first thing I want to look at is our friends over at Amazon. You don't need me to tell you the ticker symbol for Amazon.
No, I'm typing. Hold on.
Oh, there you go. So we'll give you a second. So Amazon early in the week took out the swing highs minus its shadow. And then over the course of the week, we've developed a very clear resistance zone just below that. I put that into a breakout of the breakout list, kind of confirmation, if you will. Could I sign anybody up for a break of this weekly high on Amazon?
33.20.
Yeah. 33.20.
I think position style trade for me, Frankie, something that I would probably want to like trend trade because I think this is a significant breakout. And, you know, Amazon just up at these price levels, it would make me want to trade it through things like spreads and whatnot, which tend to play better position style, but you could sign me up. Yeah.
So yeah, it's tough. Amazon is always tough for me because it's kind of tough to get the spread you like, right? But I thought that was an interesting development. How about BAH, Booz Allen? We've got a little bit of a high base that is developed after a very strong break and run on these guys. Now we're about going
Which
on
one did you want,
2
Frankie?
weeks. BAH.
Oh, BAH. Okay, Booz Allen. Yep.
So we've established a pretty clean little top, right? Trying to push through it. Hopefully can't do it here today. Just a little bit of a high base. What do we think? Could I sign anybody up for that?
I could definitely see a breakout, and you won't get any vetoes, Frank.
It's a tough one to
No,
veto.
I wouldn't veto. I
And
wouldn't veto.
you know, I
We
really
won't
like
get
the way
vetoes
it's
there.
held up. You know, it's not done anything, right? But it's that 9 has been drifting up as we've been bouncing into those resistance levels. Been pretty clear where the top is, which is always handy as well. Another one that's going to look very, very similar is going to be Fastenal, FAST. I actually brought them up and was talking with Maddie about them last
I
week.
really like this one, Frankie.
Yeah, last week,
Mhm.
right, Matt? We were saying if
Yeah.
we can somehow still be at this price range next week, we're going to really like it. And somehow we did. So I definitely like how we've developed. I do like these high base breakout trades personally. So whenever I find them, I tend to get them into a watch list, clean entries, usually a favorable risk to reward ratio, of course, not always. One other one is SHW. Another one that looks like this, our old friends at Sherwin-Williams, they've been pretty good with this little pattern. They're not particularly volatile. They don't light the world on fire, right? But we've got another little base. We took a little while to come out of that 650 base. Once we did, we had a pretty fast movement into that 680 range. Now we spend a little bit more time and almost redoing that same pattern. What do we think here? Is another one that
I could definitely sign up for the breakout here, but I just started chuckling a little bit, Frankie, when you're like, yeah, Sherwin-Williams, and it's not going to set the world on fire. And I'm like, this is so 2020. Like it's up like 14% the last 2 months, and it's just like, oh
yeah, it's just
right.
it's what I call a worm
It's
burner.
not sexy, right? It's not sexy.
I call things that go up and it just happens, but it never seems like anything happens.
Okay.
I call them worm burners.
Kind of like Tim's golf game.
Yeah, exactly. Maybe that's what I built it off of. So, on the retracement side of things,
I do like that one though. Real quick, Frankie, we have a new name. Instead of the grindy market, that's a worm burn.
yeah, that's just a nice worm burner.
You didn't get the high loft. You didn't get the high loft. You topped the ball and it just screamed. And it ended up there like it was the high loft. It got there, but it just screamed on that 9 EMA, the worm burner.
I like things that move like that. I mean, I'm never unhappy when it just goes crazy, my way. But I like things that kind of behave in that manner. Let's see here, a couple retracement candidates. How about PCAR? Pulling back into its moving averages into that old resistance zone. Could we maybe discuss, and maybe we need another candle. I would argue we probably do, but could I talk anybody into a retracement here?
I'm less interested here.
I see it. I guess the first initial thought I had, Frankie, was it reminds me a little bit of the financial sector. Obviously PCAR is much stronger than the financial sector. What I'm talking about specifically is just the last 3 days. I would have liked the financial sector a hell of a lot more if we would have confirmed, say, on Wednesday of this week.
Yeah, understandable.
You see that if we would have saw that upward movement in price maintained, great. Drops underneath the 20 gives me a little bit of positive concern. So on PCAR, I would have loved this if we would have confirmed on that right there.
Sure. Yeah. Sure.
Pulling back a little deeper underneath the 20, I get a little concerned here.
Fair enough. Fair enough. How about ETN then? Maybe that's something that on the retracement side you might like a little bit more.
I do immediately like the visual of ETN more than I like the one on PCAR.
Mm-hmm.
So we do have some overhead at 104 ish going back into earlier.
You can justify a 104 target on a 1-to-1 risk ratio.
I would say so. I believe that is true. One other retracement. How about RSG, Republic Services, over in Waste Management?
kind of like that one.
Fairly orderly, right?
Mhm.
You know, not quite as
Post
peak
earnings.
right? Post earnings,
Post
had
earnings.
some good movement on earnings as well. Maybe even confirming today, depending on your rules.
Yeah, you could definitely argue that that is confirmation. I mean, technically, confirmation would be above the previous day's high with the close. You're going to get that today. The only question you have here is when you're breaking this down on the 30-minute chart, is you have that overhead right there at about 89.70 by 90, which does coincide a little bit with a couple days of price action right here when it was trying to hold the 90 EMAs. So I think the aggressive trader, I think they're saying, yeah, let's run with it, and if it doesn't, we're fine with it. Put a stop loss right underneath support. But the more conservative, cautious trader would probably want to see 90 reclaimed.
Yeah, I can get behind that. I think you've got me sold. I'm going to steal this one from Paul, ABT, on the breakout side
Little
of things.
Abbott Lab, huh?
A bit of Abbott Labs.
Little
Paul
Abbott.
found this one. I found them as well. I've actually
Ooh.
been watching them for a little
A
I've
while.
been
while,
waiting for
yeah.
Abbott to set up for a while, you know.
Yeah, seeing some nice movement over there. If we could get the healthcare sector to kind of confirm its break, it's had a hard time, but you know, breaks don't have to happen today, right?
No.
You know, we want them to, right? We always want it to. Why hasn't it broke out yet,
Price
right?
appreciation every day, Frank.
It'll break out when
Every
it's
day.
darn good and ready. Speaking of someone who's broke out, Thermo Fisher, TMO, they've actually confirmed today, in my
I
opinion,
saw
at
that
least.
one. Yeah.
You guys know I brought them to the scan report meeting like every day for the last 3 weeks.
Yep.
Yeah. So, you know,
Good breakout
surprise.
420. Good breakout 420.
Yeah, and they laughed. They were, you know, it worked out. You know, it's a little bit of confirmation here today. Again, I still like the
You
healthcare
want to
sector's
scoreboard
potential
this one
break.
so bad. I can hear
No,
it.
no,
That's
I
why
wanted
he
to.
brought it
I
up.
can hear.
I
I
really
can
wanted to
hear.
use it.
Brought it
No,
up.
I mean it's $9 on a a stock above 420, so it's not like you're retired off of this. But what I really would like to highlight out of this is sometimes it takes a while to break out,
Yeah.
right? It
Yeah.
doesn't break out today just because I want it to. It doesn't mean it's not a breakout candidate, right? I'm as
And you
guilty.
also don't stop looking at it either, Frank.
Exactly. We can all be really guilty, myself included. Hey, this is a
Absolutely.
breakout. It didn't happen. It gets pushed back down and I forget about it. And 3 weeks
Do it
later,
all the time.
Jimbo brings it up in the chat. I'm like, oh yeah, I
Yeah.
didn't look at
Thanks for
so,
reminding us,
yeah,
Jimbo,
yeah,
on our
day
own
late, Jimbo.
personal failures, right?
So,
But no, I speak to that a little bit, Frank, because I do think that's an important conversation that all of us traders, veterans, rookies alike, need to have. Because I know some of the best trades that I never made is just simply not because I didn't identify it, it's because I didn't look at it.
yeah, didn't look at it the right day. And this is where alerts can really help you out. They really can. If you see something that's a breakout candidate, hey, if this were to break whatever this number is, I'd at least like to think about it. How long does it take to set up an alert? It might beep 3 weeks from now and you'll wonder why you set that alert up. And then you'll look at it and you'll know why you set that alert up, right? And so, those alerts can really come in handy. Get that little beep while you're just hanging out doing other things. Get your attention back over there. Keeping your watch list organized too, which is easier said than done. For some of us, but an important task nonetheless. Keep smaller lists. Keep lots of small lists instead of one gigantic list that's easy to get lost in. Right? I have, I don't know, like 25 watch lists, at any given time, but they're all what I would consider manageable individually, right? If I put them all in one list together, it would scare the heck out of me. I'd never look at it.
No, I'm with you on that. Now, I actually think a good sweet spot for the number is somewhere between 10 and 25. Some people who are a little bit more organized might be able to do 25 on per those lists, those little mini lists, Frank, those watch lists. But even like little watch list of like 10 or 15, like our bull watch list on the option report on the weekend.
Right, yeah.
That's a watch list, has 10 stocks, 15 stocks, maybe. Makes it more manageable on a day-to-day basis.
Yeah, if you're a member of Team Tackle, just at the end of the day, whenever you're doing your thing, whether it's right after the market closes or right before you go to bed, just pop over to the stock or the option report and just quickly browse through. I mean, most of the time, if it's not there, it's not there, right? And so if you train yourself to be looking for things that you do like instead of trying to decide what anything is going to do, quote unquote, tomorrow, it'll save you a lot of time. Going through the same list over and over, it is important. It is, and it's, it can be easier said than done.
I look at those lists every day. And so I'm with
Oh,
you.
so do I. Yeah,
Just
I go
quick
through a
scan.
lot of stocks every single day. I use a lot of alerts. So if you know
Mhm.
if I find something, because that's my style. A lot of times, I'm a breakout guy, right? So it's not today. I don't have to make a decision this very second usually, and so I'll set the alert right below the breakout point. So if it does happen, I can kind of get it slap me in the face and go in and do a little analysis.
Mhm. Mhm. Love it when you bring those charts, Frankie. I know our crew out there, Team Tackle, does as well. In fact, everybody out there that's watching the show right now, just say thank you, Frank. Breakout Frank, as always, coming in, bringing the heat.
It's
Let's
always my pleasure.
start wrapping up here and getting some final thoughts. It's been a light week of news in the market. We didn't get a stimulus package. We've got all kinds of other stuff that's still out there floating in the wind, but we did get through some retail earnings numbers, some other companies that grabbed our attention. Marky, what are your final thoughts going into the weekend here?
I mean, it's same as always, man. I mean, this market has been grindy for a couple straight weeks now. I mean, it's just whatever you've been doing is probably working, or it's not, and then you should probably reevaluate it, right? Because this market has been grindy, slow, methodical, and those grindy, slow, methodical markets, they make for great trading markets because the market might be grindy, but individual stocks and their setups can be really, really short-term powerful on a swing trade. So, definitely pro members, check out the scattering reports this weekend. We're going to try to find you those best setups to help take advantage of the market conditions we're in right now.
Mm-hmm. Frankie, final thoughts on a broad market?
Continue to trade what you see. We've got the all-time high on the S&P, and that I think technically is clearly what is holding the broad market back right now. That's a tough fight to win. I expect it to try, if I'm being honest, but it hasn't happened till it happened. Continue to trade what you see is always going to be my advice. We're traders, right? Wear your trader hat. Doesn't matter what the world looks like in November, right? For this trade, at least, it doesn't matter what it looks like in November. So trust your charts, trust your technical analysis, and do a little prepping, right? So, we can do so much of the heavy lifting before we get to decision time if we train ourselves to do it, right? And so that would be my challenge. If you're not already doing that, know what you want, why you want it. So when it happens, if it happens, you're not looking at it cold. You've thought about this, you've kind of prepped it out in your head, you've almost visualized the trade, right? So, if you ever have any questions on that, I'll always be happy to help you out. Just holler at me.
Love it. Love it. Maddie, we're at 3387, 13 points away from 3,400. Still very unlikely we hit that here today. Only a couple hours of trading left. And quite frankly, there's not a lot of volume action or anything like that. It's not out of the realm of possibility here, Matt, though. A pretty neutral week for the market, but playing defense on that 90 MA. What are your final thoughts for our team out there, Matt?
Honestly, I'm kind of getting into the mode of ranking, because that's kind of what we do first is we rank the sectors, the commodities, the currencies, and obviously the market itself. And so I'm starting to kind of hyper analyze some of those ranking conversations we're going to be having here in a few minutes. And you know what? I'm also excited to break down a million different bullish picks to try to find the nuance of which one makes one better versus the other. But that's what we're going to do.
It'll be big. Yeah. I think we went through
gonna,
about 4% of what
I mean, yeah, I was going to say, we probably will have like 4 cut down days here on the scouting reports. So what you will know in the scouting reports, guys, is those are the best picks we can find on a weekly basis, obviously. And, I'm looking forward to that conversation with the coaches over there at Tackle as well.
I enjoy our afternoons on Fridays very, very much. Part of it, is having you and Frank and Tyler and all the coaches submit the picks and our conversations around them. Looking forward to that here, starting here in about an hour. We do that internal meeting. Mark, you have your webinar that you go live here in about 55 minutes, I believe, 3 o'clock Eastern Standard Time. If you are a pro member, make sure you go and join Marky live. You can find that, entrance into that webinar, I believe, on the events page over at tackletrading.com. And if you're not a pro member yet, it's a pretty standard, very, very simple offer. We've got an incredible community. We've got all kinds of webinars and education and courses, and you can try it for free with a 15-day trial. There's a link in the comments below in the description of this video, and I'll drop one right in the chat for you as well. Come and join us in our pro community. See what it's all about. You know, I guarantee you're going to love it. So come on over there and join us. Guys, we are done for the week here on a Friday afternoon. Everybody have an enjoyable weekend. We will see you here again on Monday at the same time.